video looks at the Chancellor's statement in 2022. Now this is the high level stuff, the announcements that he's made. In future videos I'll be able to look at some of the detail, and maybe some of the detail reveals secrets of things that he didn't announce, which will hit us in one way or another. We will watch and we will wait. Please subscribe to the channel and I'll keep you up to date, and if you like the video then it helps me and the channel. So what was he up to in his November statement? In principle he increased taxes, particularly in two ways. He increased corporation tax, substantial increases in corporation tax, which have already been announced, but he confirmed them. And also he froze all the allowances going into many years into the future, and this lets inflation do his dirty work, because we've got 14.2% retail price inflation. So when you put that across the allowances, then the allowances are like melting, like ice in spring, and that reaps him a very great deal of revenue. Let's look at these. So corporation tax. I think corporation tax just got a lot more complicated, certainly in terms of trying to minimize the effect of these big increases in corporation tax. So the main rate of corporation tax is going up from 19 to 25%. So that's a 30% increase in the tax you pay. But there are actually three marginal rates. So if your business earns less than 50,000, then your tax doesn't change, it stays at 19%. If you earn more than $250,000, then you pay 25% on all your profits. And if you earn between £50,000 and $250,000, which is probably the majority of our clients, then you pay a marginal rate of 26.5%. So your blended overall rate is somewhere between 25 and 19%. So that's quite a lot of complication, but there's more. We have three different rates of dividend tax if you want to take the money out of your business. And then more complicated, so the £50,000 and the $250,000, that's for a group of associated companies. So if you've got two associated companies, then the allowance is split in two, so you only get half. What is an associated company? Well, there are quite complicated rules, so we'd need to look at that and see how many associated companies, so we can understand what your taxes are. And just as a final bit that he put into the mix, he changed the way and increased the way in which particularly electric and hybrid cars are going to be taxed in the future. So there's quite a lot of complication. So I think the only way to look at it is on a case-by-case basis. I don't think I can anymore give you generic rules where if you are self-employed you should do it like this. It just has become more nuanced. And I want to look at all our companies and just check to see if there's any way in which we can avoid tax, make sure people understand how much extra tax they're going to pay and how it impacts them. Because these are very substantial tax increases, and planning for those and budgeting for them is quite a big deal. So that's corporation tax. I feel like the Grim Reaper a bit, so moving on. It's all bad though. Capital gains tax. So capital gains tax I think is quite interesting. So first of all, the allowance, he didn't increase the rate of corporation tax, hooray. But the allowance for corporation tax is being cut. So at the moment it's 12,300. It's been more than half to 6,000 next year and 3,000 the year after. I think this is really taking the mickey, because when they first introduced, you see, I can remember a long way back. I've been doing this a long time. I can remember that when they introduced the 12,300 allowance, they did it particularly because at that time they got rid of indexation for inflation. So now we've got a tiny allowance and no indexation for inflation. Now, capital gains tax is all about inflation, because if you have an asset that's worth £100,000 this year with 14.2% retail price inflation, which is what it is, just to keep the same purchasing power, that £100,000 asset has got to be worth £114,200 next year. Well, if you sold it, that would be subject to capital gains tax. You take off your little bit of allowance, but you'd be paying tax on the gain, but the gain's only caused by their inflation. Well, there we go. So pensions have just been frozen. They didn't do anything to pensions. I think the big thing is that we've got to remember that there's this 1.073 million before you start paying extra tax, 55% tax, because you've gone over the lifetime allowance. And I think that will really begin to bite, actually, particularly for public sector people who've got final salary pension schemes. But it really will begin to bite. I think I'm expecting to see more on that. VAT, I think VAT is interesting as well, because of this, again, the allowance. The allowance before you have to register for VAT of 85,000 has now been stuck for 4 or 5 years at the same rate, and it's going to be stuck at that rate for the next couple of years. Well, with 14.2% inflation, that means it is absolutely melting away, and I think particularly for tradesmen it becomes increasingly difficult for them to honestly not be registered for VAT, because if you've got a tradesman, a mate, you're buying some materials in, you're going to go over that 85,000 so easily, and you know, not least because of their inflation, which has increased the price of all the materials. So I think it's increasingly difficult for tradesmen. I know that they don't want to be registered for VAT because of the unwillingness they have on behalf of their customers to pay the VAT, and because of the administration. But I just think it's going to be increasingly difficult to do an honest trade without registering for VAT, and yeah, I feel for you, but that is the case, I think. Income tax is staying the same with frozen allowances. Dividend tax, I thought that might go down. If you remember, national insurance went up by 1.25% in the spring and summer, and then it came back down again. And well, it's going to be maintained at the lower rates, so that's 9% for self-employed and 12% for employed and 13.8% for employers. So those are staying sort of what they were this time last year, but at the same time they increased dividend tax by 1.25%, and that's sticking, so we're still going to have to pay that extra tax. So us poor people who operate through limited companies, we're getting stuck for the increase in corporation tax, and then also the dividend tax. There you go. And I think that's just where the tax is hitting. So is this fair? Well, as a small business owner, I don't especially enjoy the fact that we're sort of the main victims of all these tax increases. I don't enjoy that at all. Won't enjoy telling my clients the tax bills after next year. But we have to face the reality of what we've got. Is it fair? I don't know. It depends, I guess, on whether you think the government uses their money wisely, or whether you think they waste it. And I think that's a question for the politicians and for politics. I think the fact that I'm asking the question does indicate that I'm whinging a little bit about these tax increases, but there we go. What we will do is make sure that our clients understand the tax increases, and we can minimise them as much as we can within the context of being not aggressive with the law. I hope that helped. Please keep in touch. I hope that helps. If you would like to be kept up to date, then please subscribe to the channel, and if you press the like button, it helps me in the channel. Thank you for watching.